So Costco just reported 12% revenue growth, solid earnings, right? And the stock tanked 5%. If you're sitting on cash or watching from the sidelines, you're probably thinking, wait, shouldn't that be good news? Here's the thing, sometimes even great companies get absolutely punished when the market gets way ahead of itself. Today I'm breaking down exactly what happened at Costco, why the market freaked out, and whether this dip is your real chance to buy or just a sign to stay patient. You'd think crushing earnings would send a stock soaring, right? Here's what I'm actually seeing, and it changes everything about how you trade. A company beats revenue by 12% and the stock still drops 5%. Costco just did exactly that. So what's happening? The market already priced in something different before the earnings came out. It's not that Costco got worse. The market just had expectations so impossibly high that beating them wasn't enough. That's the gap you need to watch. That's where real money moves. Here's what I'm seeing with Costco's quarter, and honestly, it's kind of textbook. Revenue up 12%, same-store sales hit 6%. That's the real metric that tells you existing stores are firing. Their membership renewal rates held strong, which is everything because that's the moat, right? Management didn't budge on guidance, so they're saying we still see the same growth ahead. Every fundamental measure here says the company executed well. So the stock drops anyway, and that disconnect, that's the thing that keeps me up at night. Because when the fundamentals are solid but the price falls, something else is moving the market. Here's the institutional trap I see happening. Take Costco trading at a premium because everyone's betting on faster growth. Quarter comes in steady, right? The fundamentals are solid, but growth doesn't accelerate. The whole narrative breaks. Stock's already up 12% heading in, so boom, profit-taking kicks in. That's the real story. With mega-cap names, you hit the bar and it feels like you somehow missed it. That's by design. The game isn't about fundamentals anymore. It's purely about outpacing expectations that are already baked in. Look, I get it, down 5% stings. But here's what matters. We're still up 12% from 6 months ago. Still trading above the 200-day moving average. That line right there tells you the long-term uptrend is alive and well. This isn't a reversal, it's a pullback. The core thesis hasn't moved. People keep paying for memberships even when times get tight. The unit economics are the same. What actually happened is investors got ahead of themselves. Ran the stock too far too fast. That's on them, not on the business. This is where you stay calm. Here's what I'm thinking on Costco right now. If you're playing this 3-year horizon, betting membership keeps growing, then yeah, this pullback is a gift. Cheaper entry on quality. But if you're a trader, hold your horses. Let me see where it bounces off support first. Before you touch it, know the levels. Then check the real test. Is Costco holding strength against the market, or is it rolling over? If it's weakening, that dip's going deeper. If the strength is holding, this could be your spot. Either way, do your homework first. Don't buy blind. Here's what I've learned. Price and growth aren't the same thing. Expectations matter more than actual results. Quality companies get hit harder when they disappoint slightly because investors had gotten way ahead of themselves. Look at Costco, the business still works. Memberships are real demand, economics are solid. The stock fell because the growth story became too optimistic. That's the lesson. The best opportunities come when good companies disappoint slightly. So ask yourself, do you understand this business well enough to hold through the noise? So Costco just dropped 5% after posting 12% revenue growth. And honestly, I think the market overreacted. Yeah, the stock's down 12% from its high, but this is actually the kind of pullback I love to see in a quality compounder. The market wanted explosive earnings, and 12% growth on a business this massive is genuinely solid. I'd be looking at this dip as an entry point for your long-term book, not a reason to panic. Strong fundamentals plus a pullback equals opportunity. Come join the free Discord at Discord.gg/R47RZGM, where we break down these setups every day.